a lot of people on this side of the Atlantic have invested money. On that side of the Atlantic, they're very long. Yet we're starting to see, as this new quarter emerges, small caps rolling over a little bit, the S&P continuing to power ahead, and the economy looks pretty good. My question is, what should I read into that small cap move off, and is it something that you would advise your clients to continue with?
Yeah, I mean, I think, as you say, the data is still absolutely stellar. There's nothing at all that suggests we've got many clouds on the horizon for the US economy. But I think there's a sense of maybe the story's a little bit too good. Maybe we're moving from comfortably warm to a little bit too hot. So almost getting concerns about the Fed having to tighten more aggressively, inflationary pressures building, and therefore that data being too good. Which makes you think about taking a little bit of risk off the table. And then in terms of just that shift, as you say, by market cap, one of the things we've been doing with our clients over recent weeks is just talking about how you add a bit more resilience. So not shifting away from equities, but just thinking about slight shifts you can do to your portfolio, which will just build a little bit more resilience. And one of those strategies is to ease back from small caps towards your large caps. So you maintain your exposure, but you're just dialing your risk down a bit. So I think the fact we're seeing that in the markets just chimes with this, incremental caution, which we should expect because we're late in the cycle.
One of the other things that investors often use to kind of judge where they're putting money is the factors, this kind of the factor overlay that they can put on top of their portfolios. Momentum. The momentum factor has done incredibly well for an incredibly long period of time. Is that momentum play still the place to be?
Well, I think, as I say, the work we've done looking at how you build in a little bit more resilience is that if you want to know that you've got factors that really support your portfolio in a downturn, you really want to be coming back towards your quality, maybe thinking a little bit more about value. And so, yeah, I think that's easing back from some of those momentum towards thinking about some of those other strategies, just to build a little bit more ballast.
So where is value right now in US equities, Karen?
Where is value in US equities right now? I mean, I still think that the near-term outlook is still really strong, and therefore we're going to see more increases in interest rates from the Federal Reserve, more than the market's currently got priced. And I still think that's a backdrop that's really going to help your financials. So I think that's one sector that we're still, particularly positive on. We still think there's components of the tech story, which, even though broad tech has had a really good run, we think that's sort of multi-cycle opportunities, very structural stories, very much linked to automation, big data, how these new consumers coming through access their consumption in the way that they didn't in the past. So, there's still long-term themes to be picked, but I certainly think, we're very cognizant of the fact we're late cycle, and, you're going to have to be a little bit more choosy about where you're putting more money to work, and particularly being very careful about the companies that underlying that, how they're going to survive in a higher interest rate environment, how they're going to cope if they have built up too much leverage.